Okay, I completed backtesting the New Zealand dollar US dollar 2018 to 19 with the 35 bounce. And that has brought us a nice 92 trades with a default winning percentage of 60.87, which for an unoptimized strategy is pretty good. So I'm looking forward to diving into this. And first thing, let's look over the entire sheet. So you'll be relatively familiar with the data entry tab at the moment, or at least these 5 columns here. Let's not worry about these 2 for now. These will be optimization things. So moving on to results comparison, you can see here it's pulled in our 92 trades, but it's marking 0 as win and all as losses. So at the moment, this isn't doing anything great for us. Settings, which we've looked at before, and then we have one of our actual results sheets. This is called results 1.0 or R 1.0 because our ratio is 1.0 for this. So we can see we have our stop loss listed here and we have our result of the trade. So this would have been a winning trade, winning trade, winning trade, winning trade, and then losing trade, which are marked in red on results. And we can't actually see any difference happening here because we have no balance and therefore no risk and no gain and loss. So while it's calculating out our winning and losing trades, we need to tell it that we are trading with X amount of money and risking X amount per trade. So if we go back to our data input tab, we can see up here we've got a couple of empty areas, risk and start balance. So let's say we wanted to risk 2% per trade on this, and our starting balance was going to be $500. Now if we go back to our results 1.0 sheet, now you can see this whole sheet has come to life. So you can see now when we win a trade, our account balance goes up, and when we lose trades, our account balance goes down. So all the same info from the start of the sheet, apart from our result, is now showing what our actual result is based on the trade, what our account balance is, how much we risked, how much we gained or lost, what gain and loss percentage we're at, and drawdown. Drawdown is basically a representation of the biggest losing streak we've had. So the drawdown is a representation of our biggest losing streak and what percentage of our account balance we lost on that losing streak. So you can see our biggest losing streak got us down to minus 24.82%, meaning we went from having a few winning trades to losing a whole lot almost consecutively right down to here at the end of July 2018, where our account balance went from our high of $541 down to $406.91. Whew! Then it took a few months to actually get back to our starting balance, and then it became profitable. That is an overview of our 1-to-1 ratio, but if you want to actually have a look over the details of all the other ratios, you can find them down here. So for example, we're looking at 1-to-1. If we wanted to look at 2-to-1, we could load up that sheet now. It says, hey, you shouldn't be looking at this because I don't want you to mess up the formulas in it. But if you're curious, have a look, you can click OK and it will load. So you can see up here, we say ratio of 2-to-1, whereas on the previous one, it's 1-to-1. And here we have the same 92 trades. Instead of having 56 wins, we have 36 wins. And we are starting with the same amount. We're risking the same amount. So instead of risking 1-to-1, as in we are betting that we will win the same amount as we are willing to risk, in our 2-to-1, we are betting we'll win twice the amount we are willing to risk. So we are risking $10, and when we won the trade, we won $20. When we risked $10.40, we won $20.80. When we risked $10.82 and we lost $10.82. So for every winning trade, we are doubling what we are risking. The best ratio to trade will depend on your strategy, which is why it's important you backtest each of the strategies and then compare them all out. While looking at this, we can see that we got to a balance of $661.96 after winning 39% of the trades. But if we look at our 1-to-1, we actually ended up with an account balance of $732, winning 60% of the trades. So while you've got the ability to win more on every single trade, there's a higher chance of losing the trades, and therefore trading with a more conservative ratio actually was more profitable. Now, instead of looking at each of these sheets and trying to flick back and forward and figure out what the best method is and what our drawdown is, why don't we look at all of them in one window? And that's exactly what the results comparison tab is for. If we want to be able to hide this sheet again, we can just right click on it and click hide sheet, and it will disappear into the background. Perfect. So if we click over here to results comparison, we can see the results of all of these ratios all in one window. Anything from 1 to 1, stepping right up to 2 to 1, and then 2.5 and 3, and then one which is actually worked out on the maximum average to give you an idea of an additional point somewhere between all of these that you might not have thought to look for. This gives a really good overview of our wins and losses and winning percentages, gains, total gain or loss percentage, and our highest drawdown amongst each of these different ratios. It will recommend one, saying up the top that this might be your favored one and your recommended ratio is 1 to 1, but this is just taken from a few basic calculations, so just take that with a grain of salt. You have to look over and analyze for yourself. So looking at all of this, I can see that the winning percentage drops down as the ratio gets higher. That's kind of expected, but we're going to try to find a balance between the winning percent, the total gain and loss, and the drawdown. So while it looks like the highest winning percentage is actually on the 1 to 1, and we earn $232 on there, I might look at the 1.4 to 1 and see, yeah, I may only be winning 51% of the trades, but because it's a higher ratio, I'm actually earning more in the long run and I have a lower drawdown. To be honest, I don't think 92 trades is enough to get an informed decision on which ratio to trade. So I would recommend doing at least 200 trades for every backtesting, if not 300 or 350, even higher. The more you can do, the more accurate and more refined it's going to be. Now that we've had a look over this entire sheet and how it all ties together, let's look at optimizing our strategy so we can bring up this winning percentage and bring down that drawdown level.